CNBC TV18, embarking on a quarter century of excellence.
Welcome back. You're still tuned into Midcap Radar. Well, the Ministry of Commerce and Industry amended Special Economic Zones regulations. Industry experts expect the new regulations to allow SEZ area to be leased faster in the future. Earlier, some of the companies had told us that absence of guidelines had impacted their SEZ leasing volumes, but now these guidelines are out. To discuss what does it mean for the industry and for the companies as well who are into commercial leasing, what's the outlook going forward? We are joined by two experts and industry veterans. We are joined by Sriram Khattar, Vice Chairman and MD at DLF Cyber City Developers, and Ajay Sharma, Managing Director at Colliers, India. Gentlemen, good afternoon. Thank you so much for joining us. Mr. Khattar, let me come to you first up. We had spoken to Mr. Tyagi earlier. He did say that SEZ volumes in leasing were impacted because of no notification on SEZ regulations. How does this change things, and how much of your total leasing volumes come from the SEZ segment?
This will surely have a very positive impact on the leasing volumes. It's clear that once the government withdrew the ATI or direct tax benefits, there was a slowdown in the leasing of the spaces in the SEZ areas. I would tend to believe that the industry vacancy is now about 18%, and that is not what was worrisome. What was worrisome is that this vacancy was continuously increasing, which means tenants were leaving faster than the new tenants were coming in because of no direct tax benefits. I think Ministry of Commerce and Industry came up with this very ingenious idea about a year and a half back, where they said that we can allow floor-wise denotification, which the industry bodies studied, and we felt it was a very good idea. It helps us do a hybrid between SEZ and non-SEZ units, thereby leveraging the high quality and global quality buildings for SEZ and non-SEZ tenants. In the DLF portfolio, our vacancy is about 14 to 15% in SEZs, and we believe that this will, over the next 2 to 3 to 4 quarters, will slowly peter down to a normal vacancy of about 5%.
Okay, normal vacancy of about 5%. Mr. Khattar, just coming to you a little bit more, because you said that this will have a positive impact. Do you want to quantify that for us? And, you did say that you do think the, occupancies will also go up. But do you think that is going to take some time? We won't see an immediate impact? And how long should that process really last?
So I'll answer the second question first. The impact will start once the detailed guidelines are announced by the Ministry of Commerce and the real estate developers give their applications for the denotification. After that, I think the pace of leasing will pick up. I would tend to think that it will take about 2 to 3 months for the guidelines and the first set of approvals to be in place, and thereafter the leasing volumes will pick up. You will appreciate that leasing is a business like the airline business, where 1 square foot not leased for a night or for a month is opportunity and rental lost. And therefore, if a vacancy, which in our portfolio is 14 to 15%, can come down to 5%, then 10% incremental rental in the SEZ portfolio, which constitutes roughly 28 to 30% of our overall rental portfolio, will definitely help in the overall volumes on one side and the incomes on the other.
Okay, so 10% incremental revenues coming in because of the vacancies which will come down. Ajay Sharma is also patiently waiting by. Mr. Sharma, I want to understand from an industry perspective now. We got a bird's eye view as well. How much of the vacancy was because of this no notification coming in from the SEZ regulations? And how much faster do you think this will get converted into rentals for the entire sector?
Well, I agree with Mr. Khattar that this impasse on the regulations really held up the absorption levels in the SEZ space. So it went to a point where, we saw absorptions dropping in year on year. So for example, I can give you the numbers. We are looking at absorptions falling from 22% into SEZ spaces of the overall office stock. In 2019, it came down to as low as 7 to 8% YTD of this year. So there was an increasing fall of absorption, which means that the vacancies went up. So today we are looking at around close to about 20% vacancy in the SEZ stock, which is roughly about 173 million square feet. Now, with this regulation out, there seems to be a lot of clarity that the government is providing on how they want the developers to look at converting those SEZ spaces, which now does not offer any incremental tax benefit for the occupiers. Keep in mind that, really about 336 SEZ units vacated the SEZ space in the time period between 2019 to 2021. So that tells you how the impasse actually affected in terms of the occupancies in SEZs. Now, with this coming in, what we believe is probably in next 6 to 12 months, a lot of action will be seen. Because a lot of domestic tariff area suppliers who do supply a lot of services to these SEZs now can directly be in the same buildings where their procurement clients are. So that will help them a lot. So, but yes, like Mr. Khattar said, the true impact will be seen when the total guidelines are out in place in detail, and then we are able to understand what exactly the government is directing the developers to do, and then we will see the incremental benefit of that.
Okay, got that. Mr. Khattar, while we are waiting for those guidelines, and of course some of the finer details will be in that, from where things stand right now, do you expect that this will lead to, significantly better rental yields? And what is the difference currently in the rental yields between an SEZ zone and a non-SEZ zone?
So the rental differences, and I can give you a ballpark number on that. It really depends from market to market and company to company. But if you take a national ballpark number, the difference is about 7 to 10%. I may just give you an example to show how this would help. For example, in Cyber City in Gurgaon, our vacancy levels are down to about 4%, 4.5%. So if there is a large tenant who comes, we have no space to offer, ready space to offer. Now, the adjoining SEZs, which are about 3.2, 3.3 million, in which the vacancy is about 600,000 square feet, 500,000 square feet, we'll be able to lease them out quite quickly after the new guidelines come in.
Okay. All right, gentlemen, we would have loved to chat a little more, but completely out of time. Thank you so much for joining us today and explaining everything on the new rules that have come in as far as the SEZ regulations are concerned. All right, with that, we'll do one thing. We'll slip into a short break, and when we come back, we'll get you more on the markets and stock-specific action as well. So stay tuned for that.
CNBC-TV18, embarking on a quarter century of excellence.